Hey guys, welcome to Backstage with Millionaires. I'm Caleb, your host, and today we're going to be talking about the latest news that's been happening in India's startup ecosystem over the course of the last week. Specifically, we're going to be talking about India's next potential IPO, an exciting new merger in India's healthcare space, the resignation of one of Goibibo's founders, a couple of startups that are starting to see things return to normal amidst the pandemic, Spicejet's latest acquihire, Oyo's continued efforts to downsize, all of the latest funding news, and more coming up right after this. Alright, so first up, let's talk about India's next potential IPO. IPO, by the way, stands for Initial Public Offering, and it's what happens when a company goes from being a privately owned company to going public, so that everyday people can buy shares in the company. So India hasn't seen an IPO since Make My Trip in 2010. That was more than a decade ago, and the IPO didn't even happen in India. However, it looks like the wait is almost over, as in 2021, online insurance aggregator platform Policybazaar is looking to go public. So Policybazaar is one of the few members of India's exclusive unicorn club, and they're gearing up to secure around $250 million, that's 1,873 crore rupees, at a valuation of $2 billion, that's 14,983 crore rupees, before their IPO in September of 2021. By the time they go public, Policybazaar intends to be valued at $3.5 billion, or 26,220 crore rupees. Talking to Bloomberg News, Yashish Daya, who's the founder and CEO of Policybazaar, said that the IPO size is expected to be $500 million, that's 3,746 crore rupees, and the company is seeing a lot of interest from global investors and will be raising funds in the coming weeks. Now, something to keep in mind in case you're thinking of investing in Policybazaar when they go public is that they were profitable in the financial year of 2018, but they weren't able to make any profits in the financial year of 2019 or 2020. That being said, the company did say that they saw growth of 70 to 100% in their insurance products last year, and because of the rising demand of insurance products amidst the COVID-19 pandemic, they're expecting to be profitable once again in the financial year of 2021. So we're gonna move on to the next news item in just a second, but before we do, I just wanted to say that if you're not already subscribed, now would be a great time to do so. We post new videos every single week about Indian startups, entrepreneurs, and the latest news. So hit subscribe, and while you're at it, you might as well hit the like button as well. Alright, so next up in the news, according to media reports, Indian e-pharmacy platform PharmEasy is in talks with Medlife for a merger. Now, the deal is expected to be worth between $200 and $250 million. That's 1,500 to 1,873 crore rupees, as both of these companies are looking to create one of the world's largest healthcare entities. India's e-health market, which is pegged at $1.2 billion, that's 11,987 crore rupees, is expected to grow at a compound annual growth rate of 68% to reach $16 billion, that's 1,19,898 crore rupees, by the financial year of 2025. With such a huge market opportunity, a merger could definitely benefit both of these companies. Medlife could benefit from PharmEasy's vast cash reserves, and PharmEasy could consolidate its position as a market leader by accessing Medlife's delivery network across 29 Indian states. Earlier in 2019, Medlife had also acquired another e-pharmacy startup, Mira, to strengthen its position in the market. Founded by Prashant Singh and Tushar Kumar in 2014, Medlife offers services like e-consolidation, lab tests, and medicine delivery. The company makes 30,000 deliveries every single day across 29 states and 4,000 cities in India, raking in 100 crore rupees, that's 13,363,000 US dollars in gross merchandise value. And then on PharmEasy's side, the company was founded by Dharmil Seth and Dhaval Shah in 2015 and is the most valuable e-pharmacy startup in India with a valuation of $600 million, that's 4,495 crore rupees, and they have a presence across 700 cities, and they've raised more than $300 million, that's 2,247 crore rupees, from their investors. Alright, next up in the news, after 13 years of building Goibibo into one of India's leading online travel agencies, Goibibo's co-founder and CTO Vikalp Sahni has announced his resignation from his post as CTO. He announced this through a series of tweets highlighting his journey with Goibibo. Now, we're going to be putting a link, as always, to those tweets in the description of this video, along with links to pretty much everything else that I'm going to be talking about today. But just to summarize, in these tweets, Vikalp recounts how he and his colleagues spent just 3 weeks weeks, building Goibibo's flight booking engine, and then how they made Goibibo into the first OTA to launch its Android app. He then continued the journey with Goibibo, strengthening the platform by acquiring Redbus in 2013, and then selling the company to Make My Trip in 2016 in a deal valued at $1.8 to $2 billion. That's 13,464 to 14,964 crore rupees. And his tweet suggests that Vikalp will be taking some time off before he starts off with any new venture. Alright, next up, we've got some very good news for employees working at companies like UpGrad, Ixigo, Grofers, and Zomato. As I'm sure you know, ever since the pandemic started here in India, there's been a flurry of furloughs, salary cuts, and layoffs. Startups have been cutting costs and downsizing in an effort to stay afloat. However, things have started to normalize. That doesn't mean that the number of cases has gone down. In fact, the number of cases is currently at an all-time high, and India is number 3 in terms of global COVID-19 cases. But in spite of that, companies like Zomato, Grofers, UpGrad, and Ixigo have started to restore the salaries of their employees to pre-COVID-19 levels. This, of course, is a huge relief to these employees, and one company that I did want to highlight especially was Snapdeal. They're already operating at pre-COVID-19 levels, but they've also started to roll out increments and bonuses as well. And this feels really good to talk about. It's a huge relief for me personally, because I feel like I've been giving you guys all of this negative news for the last couple of months, and it's just nothing but negative news. And we try to pick out the most positive pieces of news here and there. And there are good things going on in India's startup ecosystem, but of course, it's nothing like it was before the pandemic. So I'm really happy to see that there are steps that are being taken to return the ecosystem back to normal. All right, next up in the news, low-cost airline Spicejet has acquihired the team and technology platform of airline technology company Travenues. Founded in 2019, Travenues, which is an affiliate company of OTA platform Ixigo, uses deep tech to help airlines to improve their customer experience around a variety of touch points like engagement, segmentation, targeting, cross-selling, payments, and customer service. Talking about the acquisition, Ashish Vikram, who's the CTO over at Spicejet, said that this acquihire will help Spicejet to strengthen its e-commerce platform as we continue to innovate across multiple technology areas and achieve our vision of being the worldwide leader in aviation technology. All right, next up in the news, Indian hospitality unicorn Oyo has announced that they're going to be permanently adopting a hybrid workplace model. What this means in a nutshell is that a lot of Oyo's employees will now be able to permanently work from home, or they can work from co-working spaces offered by Oyo Workspaces. Now, the exception to this is Oyo's field staff, which will still need to go into the office, but pretty much everyone else who's an employee of Oyo will be able to work from home or work from one of Oyo's co-working spaces. And with that in mind, media reports suggest that Oyo has terminated leases on 2 of its flagship offices in Gurugram, and they're also in the middle of renegotiating the lease on a 3rd office. Now, this isn't a big surprise, as Oyo was operating under very heavy losses even before the pandemic began. Now though, because the pandemic is dragging on for so long, Oyo is being forced to pinch pennies and cut costs at every single opportunity. All right, moving on to some funding news now. Edtech startup Vedantu has raised $100 million, that's 745 crore rupees, in its Series D round from investors like Coatue Management, Tiger Global, GGV Capital, Omidyar Network, and Westbridge Capital. With this Series D round, Vedantu has now raised a total of $200 million and is now India's 2nd most valuable edtech startup with a valuation of $600 million, that's 4,473 crore rupees, putting it behind Bijnis, which is valued at $10.5 billion or 78,270 crore rupees. Founded by Vamsi Krishna, Anand Prakash, Pulkit Jain, and Saurabh Saxena in 2014, Vedantu offers an interactive online learning platform for students from 6th to 12th grade. Recently, the company has also started offering courses for 1st to 5th grade students as well. And just like most edtech startups here in India, Vedantu has witnessed an exponential growth during this COVID-19 pandemic. Specifically, they've seen a 220% growth, adding more than 2 million students on its platform during the pandemic. Counting on this hypergrowth continuing, the company expects its revenues to grow 10x in this financial year. They're also going to be using this fresh capital to strengthen their latest 1st to 5th grade education category. All right, next up in the funding news, digital lending startup InCred has secured 500 crore rupees, that's $67 million, in debt funding from several public sector banks and financial institutions. Founded by Bhupinder Singh in 2016, InCred is a new age financial services company that uses technology and data science to simplify lending by making it quick and hassle-free for consumers and SMEs. To date, InCred has provided loans worth 2,100 than 100 crore rupees, that's $280 million, to its customers. This fresh capital will enable InCred to offer more loans across its consumer, education, and micro, small, and medium-sized enterprise segments. Alright, next up in the funding news, B2B marketplace Bijnis has raised $10 million, that's 74.6 crore rupees, in its Series A round from Matrix Partners, Sequoia Capital, InfoEdge, and Waterbridge Ventures. Founded by Siddharth Vij, Chaitanya Ratti, Siddharth Rastogi, and Shubham Agrawal in 2015, Bijnis, which was previously known as ShoeConnect, is trying to create a trusted marketplace for manufacturers and retailers. The company uses its technology platform to enable retailers in unorganized markets to easily purchase products directly from manufacturers. To date, Bijnis has helped more than 400 manufacturers to sell products to over 60,000 retailers across India. The company will be using these latest funds to scale its platform by adding more manufacturers and retailers, while strengthening its technology platform by building more products focused on manufacturers in the footwear and fashion categories. Alright, next up in the funding news, solar energy solutions provider Fourth Partner Energy has raised $15 million, that's 110 crore rupees, in debt funding from Swiss asset management firm Responsibility Investments AG. Founded by Saif Torajiwala, Vikas Salagutti, and Vivek Subramanian in 2010, Fourth Partner Energy is one of India's leading solar energy companies, offering distributed rooftop solar panels, enabling its customers to transition to cleaner energy while reducing their energy costs. The company manages 400 megawatts of assets for 150 clients across 23 states in India. Talking about their future plans, Pradhum Reddy, who led the transaction for Fourth Partner Energy, said that in our 10th year of operations, we're looking to add capacity of close to 350 megawatts across both distributed solar and open access portfolios. We are building solar parks in Maharashtra, Tamil Nadu, and Uttar Pradesh. Alright, next up in the funding news, MPowered, which is a Gurugram-based asset management solutions provider for real estate owners, has raised $21 million, that's 157 crore rupees, in its pre-Series A round. These funds were raised from a group of US-based HNIs, that's high net individuals, led by Ashok and Shelly Nishani. Founded by former GoWork CEO Sudeep Singh and Bhavna Junega in April of 2020, MPowered helps real estate owners to convert their unutilized properties into profit-generating assets by converting them into co-working or co-living spaces. The company is going to be using these fresh funds to expand into new real estate verticals like warehousing, residential, and commercial spaces. Another part of the funds will be used to strengthen its technology platforms like mGauge, which is a tool for efficiently managing workspaces, and Powered by M, which is a co-living and co-working management platform. Alright, that is all the startup news that I have for you guys this week. I hope you enjoyed the video, and I will see you guys in the next one.